Hi, welcome. It's Mary Ellen McGonagle with your Weekly Edge show for Saturday, February 25th. Let's get started. Today, we are going to take a look at some of the more impactful news that drove price action last week, a very turbulent period, but you will want to know how we close the week. And then all of this is with an eye toward helping prepare you for next week. We'll also take a look at where, again, we close, take a look at the market indices, and then beyond, look underneath and see which sectors have relatively outperformed, and then sub-industry groups as well. And then from there, viewer industry question of the week. And from there, viewer question of the week. And it's all about which stocks are essentially benefiting from the conflict taking place between Russia and Ukraine. There are two areas in particular quite strong. I'll share those as well as individual select stocks. So let's go ahead and take a look at some of that news from last week. Of course, Russia and Ukraine, the conflict taking center stage as Russia continues to move further into Ukraine. From there, we did get economic reports, and one item closely watched was the core PCE price index. This is an index that the Federal Reserve uses to gauge inflation, and if the number were high, there was anticipation the Fed would get more aggressive, and the number came out in line with expectations. So that was good news as it related to less volatility into the later part of the week. We did get economic data in the way of durable goods orders. They rose in January 1.6%. And then consumer spending rebounded as consumer sentiment increased. So the economic backdrop is firming up from a disappointing period in late January into early January due to the Omicron. So that's good news there. Next week, pretty light on the economic calendar. February employment numbers will be released on Friday, as well as factory orders that will come in to play, also giving more insight into the backdrop with the economy. So from here, let's go ahead, take a look just where did the markets close for the week. And first up here, we are looking at a daily price chart of the S&P 500, and we can see just how volatile it was last week. Of course, very bearish going into this holiday shortened period with the looming conflict between Russia and Ukraine. And so we did have an initial sharp drop in the markets. However, on Thursday, as President Biden came out with his sanctions against Russia, the markets did begin to not only firm up, but reverse the downtrend on that day. The big level we were looking at is this 4222 on the S&P. That was the spike low on January 24th, and it was support. The good news is on Thursday we did close above that area of support, and in addition, a further rally on Friday pushed the S&P up above this green 10-day simple moving average. Other encouraging dynamics are the fact that the RSI, which is a relative strength indicator, it's in negative territory, but it is sloping upward. That certainly is encouraging. The stochastics, a faster moving momentum indicator, in negative territory, but it too is sloping upward. We will want to see it break above 50, likewise with the RSI, and then even more constructive price action on the NASDAQ. We will be on the lookout for that as well to confirm a potential new uptrend. Let's take a look at those S&P 500 sectors, and what I've done here is added a relative strength indicator, sorted it in descending order. So we want to see where the relative outperformance is. This is a 2-month daily price chart view of those sectors, and we can immediately see, similar to last week, that the more defensive areas of the market are up here at the forefront. That's consumer staples, utilities, and healthcare. Of course, energy remaining up here in the forefront as well as the conflict is impacting oil prices, and we will get more into that as we move on. Of these four sectors, the one that is of most interest to me at this time is healthcare. It was the top performing sector last week, up 2.7%. And while some of that is bottom fishing, there are other areas within healthcare. We can see how much it did in fact sell off before this nice 2-day rally over the last 2 days. We still have work to do, not in bullish territory quite yet, but keeping an eye on that industry, or actually sector. So from here, let's go ahead and take a look, because I think this week the sub-industry groupings are going to be even more telling than the broader sectors. So I have a number of ETFs here that I've populated, again, a 2-month daily price chart view, RSI. So up here in the left quartile are your stronger areas, and take a look. Brent crude got up above $105 per barrel for oil, and that is a very high level. Again, all about reduced oil output with various sanctions taking place, but by and large, the oil pricing does remain in an uptrend, and in fact, there is speculation we could see continued upside there as pressures continue to mount. We did see a big spike in gold. Now, this particular spike on Thursday was going into the open as fear overnight really pushed this safe haven area higher at the open. It did gap up. Here's a 15-minute price chart really to help examine what occurred on that first 15 minutes. We did see gold spike very high, but then it did pull back, and pointing this out because you can use these intraday charts as a guide to help you know whether the stocks that gap up will trade higher. Ideally, you will want to see on a gap up the next 3 bars, in fact that third print, trade above the high on that first 15-minute. We did not get that, so gold has pulled back since then, as has volatility. We'll take a look at that in line with the fact that sanctions are being put out there that has really helped investors' frayed nerves kind of recede a bit here. Here's a look at volatility, the VIX index, and again, Thursday spike into the open and then pull back. We're still at elevated levels. We're at about 28, and anything above 18 is indicating continued fear among investors, but the fact that it has receded from that spike on Thursday is good news. So let's take a look at some of these other industry groups here that are definitely worth noting. I mentioned healthcare was a top performer. This ETF is U.S. medical devices. IHI is the ticker symbol. It was up 5%, over 5% for the week. On the lookout, because this particular area, when it does get going, it has a number of high growth healthcare names within it. We want this area to participate, so keeping a close eye on that. And then bank stocks, they did get hit hard on Thursday. Speculation that the sanctions were, as it related to freezing assets of Russians, would impact those bank stocks that are in any way associated with Russia, and the overall group did get hit, but a nice reversal into the close. The RSI now positive. KRE is the regional banking ETF, so we're seeing constructive action there with these bank stocks coming back. I do have a couple of names on my MEM Edge report that really outpaced the broader index. So from here, other areas certainly worth noting. Software, another big performer, actually relative to the markets, which were up 0.8% on the S&P. Software rallied 3.3%. Still has work to do here. We still have our outside momentum indicators in negative territory, but this is another area that I'm keeping a very close eye on, with an eye toward once, in fact, when they do turn bullish, the watch list is waiting. Semiconductor stocks also traded up for the week, 2.3%. A lot of traffic here, still has work to do before turning bullish, but again, another area that I'm keeping a very close eye on. So from here, let's take a look at some of those areas that are performing well And from there, we can then look at an individual stock. And first up, we will look at NUE. This is Nucor Corp. And this is in line with metals stocks that are rallying during this particularly high volatile period. These stocks will fare well, certainly in times of inflation. We are in a high inflationary period, but also this Russian-Ukrainian conflict, there is anticipation that commodities, there will be less output and there is very high demand. The combination is causing these stocks to rally higher. So NUE is a name that I chose because the company reported very strong earnings at the end of January, 518% year-over-year growth back here. And then, of course, this subsequent rally over the ensuing weeks has pushed the stock out of a 7-week base. And many of you may know base breakouts are a very powerful stock chart formation. And we did also see this base breakout occurring on above average volume. Your outside momentum indicator, RSI, is above 50, trending higher. And then that moving average convergence divergence, that's your MACD, also trading higher. Another area and certainly another stock that is faring well during this period with war-torn areas in Russia and Ukraine are aerospace and defense stocks. And up here we are looking at Huntington Ingalls. HII is the ticker symbol, and we can see the stock has broken back above each of its moving averages. This red is the 50-day, this blue line is the 200-day moving average. Very high volume, and this company has been receiving Wall Street upgrades this past week, and that's because they just were awarded a large contract by the U.S. Naval Department. And take a look at these momentum indicators, RSI trending upward and above that 50, and we can see the MACD, that moving average convergence divergence, had that black line up through the red, indicating the downtrend has reversed, and it is also now up here in positive territory. And then, as mentioned, aerospace and defense stocks are faring quite well during this current period. That's it for this week. Everyone have a great rest of your weekend, and I look forward to seeing you here next Saturday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.